So the conversation is around the equities play in 2018. We've seen a very decent year, 2017, so we can as well pop the champagne as far as the market is concerned. But there are a few concerns about 2018. Let's begin to track down the year and track up the next year. Obianuju Nsofor, one of the research analyst team at Afrinvest, is here this morning to start this conversation for us. Good morning.
Good morning, Boason.
It's good to see you.
Good to see you too, sir.
Are you guys winding down already?
Well, the year is coming to an end.
So you're winding down portfolio?
Yeah.
Are you? So as you're winding down the year, I say it's been a very decent year. Do you agree?
Well, yes, we quite agree in terms of the fixed income as well as the equities market. I mean, investors that played in both segments of the market got very impressive returns so far in the year.
In terms of equities, who are the big players for the year?
Well, the big players, you have to give it to the banking stocks. I mean, on a year-to-date, they've outperformed the benchmark index as well as all other indices. I mean, this is not far-fetched given their resilience that they've able to prove over the years. So you have to definitely give it to the banking stocks. I'll
give it to the banking stocks.
Yeah.
Okay. What are the key fundamentals of for the equities market in the outgoing year?
Well, okay. Looking at the broad overview of the equities market, for the Nigerian equities market, is one to note that it's a market heavily driven by the foreign investors. I mean, they are the most dominant players in the market, given the risk-averse nature of the local investors. So even when you look at these local investors and look at the big players, such as the institutions, I mean, the pension firms and the likes, they sort of adopt a passive strategy. I mean, they would just play across the fixed income market and get decent returns there. They're not much active in the equities market. So barring that, there's no factor which may deter foreign investors from keep playing into the equities market in 2018. We ought to see a more vibrant market.
In terms of the economy, basically speaking, do investors really care about what happens in at the macroeconomic space to decide whether to play in a particular stock market?
Well, definitely you have to consider all factors. Looking at the macro, it sort of tells you what exactly is going to happen in some specific sectors. So as the economy is expanding, I mean, we are a highly consuming nation. So you look at consumer goods sector, you ought to see some sort of trickle-down effect in that part of the sector. So the macro sort of like tells you, I mean, inflation, you're looking at FX. Look at the banks now. FX was a major challenge to them in 2016. You also look at cutting across all other sectors due to the fact that some of our raw materials are sort of imported, although that we see some consumer goods companies sort of, they are trying to switch towards local raw materials in order to stay away from the volatilities in the FX market. But then again, you look at FX, it's a major determinant. So investors that are looking to key into this market, you have to first look at the macro story. I mean, what is it telling before you decide to invest in any particular sector?
So FX, if we try to apportion percentages, so we say FX was the big story for the market, for the equities rally in 2017. What percentage would you attribute to that?
Well, it's a huge determining factor.
70,
like I said, I would say is one of the major dominant factor, because in terms of foreign players who are the major drivers of this market, I mean, they are looking at FX. Although the fact that the FX depreciated and it sort of made our stocks attractive, but then diving into the local market, how do they get back their funds back? They've made so and so returns. How do we get this monies back? So this is a factor that they have to look at. Then you look at these companies. I mean, majority, industrial goods, consumer goods, I mean, majority of their inputs are sourced abroad. So, I mean, if the Naira is depreciating, these are higher costs, going to pressure the margins and drop down profitability. Investors will not be willing to invest in this sort of companies.
So FX story was good, so I'm going to ascribe 80%.
Well, Yeah, possible.
Possible. Okay.
Yeah.
Then we have about the macroeconomy about 20%, and that takes us to the fundamentals of the companies within the market. So if we take out the banks,
yeah,
and we're dealing, we take out the banks and insurance, then we're dealing with agriculture, consumer goods, industrial goods, and we're seeing first quarter, second quarter, third quarter earnings. So the macroeconomic story, which is between 10 to 20% of the entire sentiments that drove the market this year and would likely be major considerations for the new year, we can't discount this as well. That means from the policy side of things, yeah, do you think the fiscal authorities seem to have their fingers on a few buttons that investors are considering when they look at the numbers that the companies are pushing out?
Okay. Before I answer that, I think it's bound to note that before I dive into the individual sectors, that what's basically on a fundamental basis drives investors into keying into any of these stocks going forward in 2018 would be positive earnings growth. I mean, you look at over the years, 2016 was a tough year for most of these companies. How were they able to fare? So they are looking at stability, consistency. How consistent have the profitability of these companies been? And not just making profits. I mean, you look at the margins. How is the gross profit margin? How is their profit margin? I mean, it's definitely something you have to look at. You compare it to the industry before you sort of like dive into any of this stuff. Also, you look at dividend history, which is one of the ways investors can sort of get back returns. You're looking at capital appreciation or dividend history. For a company to be able to pay dividends, they have to be profitable, except they have a negative retained earnings, whereby they just put it back there. So for a company to be able to pay dividends, they have to be profitable. So in order to be profitable, you have to look at what actually drives revenue and how they've been able to keep their cost pressures low, which you look at all the other factors that goes into that.
If we look at 2015, 2016, we've seen a number of companies in our space raise prices.
Yeah.
But despite that, they still were able to make decent gross revenue all the way to the bottom line, to price, to earnings per share.
Yeah, so you look at the industrial goods, which is one of those companies. Yeah. Some of the companies that they also raise prices. So they needed to adjust for these to alternative sources of fuel. In order, so you see the likes of Danksem, you see the likes of WAPCO that sort of did that in order to boost their margins. Then also consumer goods as well, they raised prices, but in turn they also had to sort of get some of these raw materials locally. I mean, it's not, the impact is not there yet, but they're making strides in order to ensure that going forward, because this is one of the major factors that is actually going to drive sentiment. You look at the likes of 7-Up, I mean, they've made a loss so far in the year. If you look at their cost, it takes up a large, over 80% of their revenue. So you see that their margins are not quite, they've actually made a loss. So you look at 7-Up, flour mills, they have like a high percentage, sales, cost of sales actually eats up a large percentage of their revenue. So it's definitely something that these companies have to look forward to going forward.
So 2018, in terms of the economy and the market, what do you consider as what should we look at as the fundamentals for those 5 key sectors on the stock exchange: the banks and insurance, consumer goods, industrial goods, and the oil and gas? Okay,
start off for the insurance. For the insurance sector, which is, I think one characteristic of that stock is that it's very illiquid. I mean, you wouldn't compare that to the banking stock, which are quite very, very liquid. So the insurance stocks, they have a downplay of regulation to look forward to in 2018. I mean, you're looking at...
there could be new regulation?
Yes.
In terms of...
Yeah, in terms of shoring up their capital base. I mean, if you look at the last capitalization exercise, you saw companies do, because you have the life, you have the non-life, the composite firms, we play in both segments, and you have the reinsurance firms. So you saw that these companies, they had to, from a low capital base of about 150 million, they had to shore up to about 2 billion naira. So if you still want to play in your own space, depending on which part of the insurance market you actually play in. You either have to merge or you have to get more capital.
So between recapitalization and consolidation, that will be, and risk management for the insurance. What should I be looking out for with the oil and gas?
Well, the oil and gas for the upstream players, it's still a positive story. I mean, production is still up. You look at global crude oil prices; they've stayed above $60 for the last few months. Q1 2018, we are looking at a low base. You look at oil production at that quarter of the year and compare it to the second half of 2017. So
I should have less worry with Seplat, for example.
Yeah, for the likes of Seplat, for the likes of Owando, for the first quarter of the year, they are dealing with a low base from Q1, from the first half of 2017.
You think there's a potential upside in price for Seplat? Let's leave Owando out of the conversation until they resolve some of the issues. You think there's a potential upside at 540 where it currently stands? Well,
definitely. If you look at the OPEC and non-OPEC deal, it's still extended till 2018, so that is still a positive for them. And like I said, investors are looking for positive earnings. They are looking for stability, and this is what is going to actually drive performance of these stocks.
So for the rest of that space, Mobil, Total, Forte Oil, MRS, the other retailers, what's your take on them?
Okay, for the downstream, it's still a bit uncertain because if you look at now, the existing pricing template is still not flexible. In order to remain profitable, they have to access FX at the official market. I mean, there's still that over-dependence on NNPC as a major supplier. So until that is sort of resolved, then we can see. And also there's this perception that some of these stocks are quite overvalued. So investors might not be too willing to play in that sector. And if you look at on a year-to-date basis, the oil and gas sector has sort of underperformed as compared to the other
industries. If I'm doing oil and gas in our market, what exactly am I looking for? What should I be looking for? Should I be looking at the petrol queues returning? Should I be looking at the price of petrol at the retail station? What exactly should I be looking for? Well, what should drive my sentiment, basically?
Well, definitely for the upstream guys, you know that for them to make profits, I mean, oil price has to stay above a certain mark, and as well as production volumes. I mean, if there's any resumption in militancy activities, this is going to affect the operation of some of these companies. So then for the downstream guys, I mean, if per se we are looking at next year, early next year, there is perhaps a review of the pricing template, you see that it's going to be much more favorable for this downstream players.
Okay, let's finish off in the consumer goods because that's what I eat every day. So I'm going to go back to put my stock where my mouth is and vice versa. What's the take on this sector moving forward in 2017 in terms of what is Afrinvest stock pick if you're looking at the new year?
Okay, for the consumer goods, they've sort of enjoyed a positive sentiment from investors this year. You look at the likes of Nestle, is over about 1,400 naira. Early this year, it was trading about 500 naira. You look at the likes of Dank Sugar, Dank Flour. I mean, they've sort of rallied this year. But then again, we sort of take a look at flour mills. I mean, they are currently ongoing on a rights issue, and the company is highly leveraged. So by the time they're able, if they have a successful rights issue, they're about to reduce their debt obligation, and this should impact on finance charges and sort of improve profitability. So this should have a positive impact. So our topic for the consumer goods is going to be flour mills. And also, NASCON is also a stock to watch out for. And they sort of diversified from just being a stock from a salt company to vegetable oil and tomato paste. And so it's definitely a stock to watch out for in 2018.
We have a lot to watch out for. But let's leave that conversation today to start the brand new week. Thank you very much.
Thank you, Boason.
Obianuju Nsofor, one of the research and investment analyst team at Afrinvest. When we come back, bond is still in play. Buhari means bond. And one of his new babies go on the market today. The book building for the green bonds, 10.69 billion, starts right now.